Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Hello, everybody, and welcome to Caribbean Business Review. We are back with you, and this time it was our third episode that we'll be dealing with today. And I'm quite pleased, aside from advising you that my name is Joseph Cox, I'm quite pleased to see my co-host, what should I say, recovered, fit as a fiddle.
Yes, Joseph, I'm very happy to be here. And to our viewers, I am Sherry Farquharson, and we've had a very exciting week. So I'm definitely looking forward to this episode of the Caribbean Business Review.
Well, you call it exciting, I call it festive. Because believe you me, I have not seen so many things that occurred. I mean, aside from almost overnight at the weekend, at the start of the weekend, United States is now indicating that they'll be putting on a 50% tariff on steel and aluminum exports
Yes,
or
we're
imports
already
rather. So
seeing.
that is one very significant development.
Yeah, and we're seeing where the tariffs are expected to affect 84 million jobs worldwide.
Indeed.
And so that, just make things
Interesting.
interesting.
And
Interesting
also,
is definitely
also
the
on a
word.
brighter note, for within our region, we see that Jamaica has now received the upgrade from the travel advisory, moving from um, what is it now, category three, as they call it,
Yes. Yes, to
stage three,
category
which
two.
was reconsidered travel, to two, which is exercise travel with caution, right? With increased caution. Now that puts us in some reasonable company, I suppose, because countries like the United Kingdom have that sort of designation. So perhaps this will be the necessary boost that the tourism industry was hoping for, and we'll see how that pans out. So that's where we are. Where we are. Where in terms of some of the items that one would say are breaking, but I mean, honestly, Sharian, when you look at the 84 million jobs under threat, it just boggles the mind, to be honest with you.
Yeah, it really does. And the when you think about the economies that are going to be affected, because you're looking at economies in Asia and then even in our region like Bermuda that is so dependent on services, and so it's like the struggle is real.
Yeah, it is real. But all right, coming up on the program today, we of course start with our strategy brief, which we'll do in a couple of minutes, as it were. Then we'll follow up with Market Watch and Global Pulse. The Island Insights this week, we're going to be speaking with Mr. Gervais Warner, who is the chairman of the CARICOM Private Sector Organization, former CEO at Massey Group, and an independent director for Sandals Resorts, as well as Ms. Dan Ashton Smith, who is the head of corporate affairs at Red Stripe. So all in all, Sharian, we're gearing up to have quite an interesting day. But I mean, I know that with you and the Market Watch and Global Pulse,
Yes,
these
for sure. Because
items,
even in the markets, when you're looking at Barbados and the Bahamas, who have piloted where you can do transfers directly between the countries without going through an intermediary currency, and I'm hopeful that that will eventually lead to quicker and cheaper transfers and help to boost regional business.
right? Well, with all that said, we have an interesting, what should I say, a few minutes ahead. So let's get to it, just after this break. This is Caribbean Business Review. these complaints. I went to the store, and because of a system glitch, the cost of my purchase was deducted multiple times, and now the bank is dragging its feet to refund me. Or my credit card was cloned. I reported it, but the bank is still telling me I have to pay the balance while they investigate. Or this one. I've been paying health insurance for years, and now that I finally have a medical emergency, they are saying it's not covered, or they're offering far less than what was promised when I signed the policy. These stories are all too common across the Caribbean. In recent years, Caribbean financial systems have undergone a quiet transformation. From digital banking to microloans, insurance to pensions, the region is seeing unprecedented expansion in financial services. But with that growth comes a critical question: who protects the consumer when things go wrong? This is where a financial ombudsman becomes indispensable. A financial ombudsman is an independent, impartial office that resolves disputes between financial institutions and the public, offering fast, fair, and free resolution outside of the courts. Indeed, think of it as a watchdog and problem solver rolled into one. Right now, most Caribbean countries don't have one, but the Bahamas does, and it's proving just how powerful this model can be. Their financial ombudsman has helped resolve hundreds of complaints involving banks, insurance companies, and pension providers. It builds trust in the system and saves consumers time, stress, and money. So, what are the benefits? First, it's about consumer protection, from unfair loan charges to delayed insurance payouts. Caribbean consumers often lack the means or legal firepower, frankly, to challenge financial giants. A financial ombudsman levels the playing field, especially for vulnerable groups and rural populations. Second, it supports market stability. Financial institutions benefit from clear, predictable standards for dispute resolution. An ombudsman encourages them to improve their internal complaint systems and adopt fairer practices. In turn, this boosts public confidence and reduces the risks of reputational damage and court action. Third, it creates valuable intelligence for regulators. When disputes spike in a particular area, say loan restructuring or mobile wallet failures, the ombudsman becomes an early warning system. It helps central banks and financial commissions see patterns and respond before problems spiral. And fourth, it strengthens our investment climate. A well regulated, transparent financial sector reassures both local investors and international partners. It's one of those soft factors that improves ease of doing business scores and de risks the financial environment. Now, what would a Caribbean model look like? It should be independent, funded by levies on regulated financial entities and not taxpayers. It should cover a range of services: banking, insurance, pensions, credit unions, or even fintech. And it should have the power to make binding decisions on small to medium value claims, cases where consumers often give up because the cost of fighting is too high. But it's not just about the nation, it's about the region. Imagine a network of national ombudsman offices sharing best practices. Imagine a regional ombudsman forum that helps manage cross border complaints as the CSME matures. This isn't just possible, it's necessary if we are serious about regional financial integration. So, what's next? Governments and regulators need to take a hard look at their frameworks. Civil society must advocate for consumer rights, and development partners from the CDB to the World Bank can help with technical assistance and startup support. Because ultimately, this is about dignity. It's about ensuring that in a modern Caribbean economy, access to justice doesn't depend on income, location, or connections. A financial ombudsman is more than an office. It's a promise that fairness still matters. It's time to bring that promise to every corner of the Caribbean.
Welcome to Market Watch, your weekly pulse on the forces shaping Caribbean business, finance, and policy. I'm Sharian Farquharson. We begin in aviation, where Jamaica's Norman Manley International Airport is flying high. Passenger volumes reached 580,000 as of April 2025, up 10% over last year and surpassing pre pandemic levels. Cargo movement also surged 33% thanks to booming e commerce, and aircraft activity climbed 11%. The US remains NMIA's dominant market, accounting for 64% of traffic. Turning to trade, Jamaica's January import bill dipped 6.1% to US 647.6 million, largely due to falling fuel and capital goods costs. Exports were down 15.2%, dragged by a sharp drop in mineral fuels, even as domestic exports rose modestly. However, trade with key partners like the US and China ticked upward, with a 31% boost in crude material exports. In the Bahamas, momentum continues. Government revenue jumped 12.2% year on year to $2.5 billion, narrowing the fiscal deficit to $178.9 million. Meanwhile, Prime Minister Philip Davis unveiled the country's first balanced budget since independence, projecting a 1.7% surplus for the 2025-26 fiscal year. Key measures include VAT cuts on essentials, reduced customs duties, and $90 million infrastructure loan. The Bahamian government is also modernizing its land administration system. Two new bills propose a shift from deeds to titles, unique land parcel IDs, and a tribunal to resolve disputes aimed at boosting investment and credit access. In finance news, Advantage General Insurance saw profits plunge nearly 80% in 24, down to $83.8 million, despite an 18% revenue bump. Rising insurance service costs eroded gains from stronger investment income. On a brighter note, Kingston Properties Limited posted a strong Q1. Rental income grew 24%, net profit rose 6%, and occupancy hit 92%. The company also began work on a new warehouse project in Kingston. In banking, Republic Financial is moving to fully acquire Cayman National Bank with an all-cash offer of US $7.75 per share. The move would cement its presence in the Cayman Islands, where it already holds a majority stake. Meanwhile, digital finance in the Bahamas is evolving. Internet banking users surged 39% to 164,000 in 2024, but digital wallet use, especially the sand dollar, fell sharply. Despite growing e-money accounts, adoption of government and business payment channels remains limited. Across the region, multilateral finance is seeing innovation. The Caribbean Development Bank has signed over US $1.1 billion in exposure exchange agreements with CABE and CAF. These deals help diversify credit risk, strengthen capital adequacy, and unlock more lending for sustainable development. Bahamas and the Barbados are breaking new ground in regional finance. The two countries announced a successful pilot of an instant cross-border payment system. Under the CARICOM Payment and Settlement System, or CAPS, businesses and individuals can now transfer money in real time directly in local currencies without using the US dollar as an intermediary. More countries are expected to join as the system rolls out. In the corporate world, former shareholders of A.S. Bryden and Sons are selling over 10.76 million Class A preference shares on the Jamaica Stock Exchange. The move follows Zeprod's 2022 acquisition of a 60% stake in A.S. Bryden and Sons Holdings and coincides with its bid to increase its stake ahead of Bryden's planned listing on the Trinidad and Tobago Stock Exchange. In agricultural policy, Jamaica is advancing a Jamaican $1 billion pension scheme for farmers. Minister Floyd Green also announced a $7.5 million boost to the GK Weather Protect parametric insurance program, aiming to reach 5,000 farmers in disaster prone zones. In St. Vincent and the Grenadines, remittances have declined, partly due to U.S. immigration crackdowns. Finance Minister Camilo Gonzalez noted that ICE operations outside remittance outlets have deterred migrant transfers. Still, local employment is rising, with joblessness falling below 10%. To Bermuda, where its reinsurance industry remains a powerhouse, contributing nearly US $2 billion annually, about 29% of GDP. The island controls an estimated 35% of global reinsurance capacity and has paid out over US $500 billion in claims, primarily in the United States. Also from Bermuda, the Corporate Income Tax Agency has launched a consultation on amendments to the 2023 tax law. The revisions aim to align with OECD Globe rules and refine rules around loss carryforwards, foreign exchange conversion, and fiscal transparency. Foreign exchange rates across CARICOM remain relatively stable, with the US dollar maintaining parity in the Bahamas, while the Jamaican dollar trades at $160.12 to $1. The Eastern Caribbean XCD holds steady at $2.71 per US dollar, and the Trinidad and Tobago dollar trades at $6.77 to $1. The euro and British pounds continue to command higher conversion across the region, reflecting persistent strength in those currencies. Now for our regional stock market wrap. The JSE index rose 0.14% and the All TNT index inched up 0.01%. The standout performer was the BISX All Share, jumping 2.11%. The Caribbean Exchange advanced 3.58%, and the JSE Select moved up 0.47%. Top gainers included Pulse Investments, up 12.79%, and Maybury Jamaica, up 12.36%. On the downside, Epley Caribbean Property fell 14.5%, while 138 Students Living dropped 10.86%. In energy markets, oil prices softened. The WTI dipped to the US $60.79 and Brent to $63.90 amid speculation of a larger than expected OPEC Plus output hike for July. Natural gas slid 1.7% to US $3.46. And that's it for this edition of Market Watch. Coming up next, additional insight and analysis on the Caribbean's evolving business landscape, right here on the Caribbean Business Review.
Change. Insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Welcome to Global Pulse, where we bring you the top international developments shaping markets, trade, and policy from around the world. I am Sharian Farquharson. Today, we begin in the United Kingdom, where the IMF has revised its 2025 growth forecast to 1.2%, slightly higher than earlier estimates. However, the fund is urging London to stick to fiscal rules amid growing spending demands. Risks from tariffs and global uncertainty may dampen 2026 growth by 0.3%, But inflation, which jumped to 3.5% in April, is expected to ease back to 2% by late 2026. Also in the UK, business confidence hit a 9-month high in May, jumping to 50% on the Lloyd's Business Barometer. Optimism rose across construction, services, and manufacturing, while hiring and wage expectations also climbed. However, retail confidence slumped to its lowest level since January. Turning to Asia, China is expected to collect a record $22 billion in Belt and Road loan repayments this year, as grace periods expire for 75 developing countries. The shift from lender to collector marks a significant inflection point for Beijing, with potential implications for its global standing as it faces intensifying pressure to renegotiate debt obligations against the backdrop of its own economic slowdown. Still in China, the government will nearly triple its tax refund stores to 10,000 by end 2025 to attract tourists and boost retail spending. The minimum spend for tax refunds will drop from 500 to 200 yuan, roughly US $27, as part of a broader push to increase inbound travel and shopping. Meanwhile, in the United States, core capital goods orders fell 1.3% in April, the steepest drop in 6 months, signaling weak business investment. Durable goods and housing demand also declined, but consumer confidence rebounded sharply, helped by a 90-day tariff truce with China that slashed levies from 145% to 30%. Still, tensions remain. The U.S. Court of International Trade has limited President Trump's ability to impose tariffs unilaterally. While emergency powers now require congressional approval, the White House may still apply temporary levies under the 1974 Trade Act. A 50% tariff on EU goods has been postponed to July 9 amid continued negotiations. The International Labour Organization warns that the new U.S. reciprocal tariffs could place up to 84 million jobs at risk globally, especially in Asia and small trade exposed economies like Bermuda. As a result, global GDP growth has been downgraded to 2.8%, with job growth expected to slow. Elsewhere, Pakistan's inflation outlook has improved significantly. The IMF projects average inflation below 10% through 2030, following tighter monetary policy and better food and currency stability. Nepal forecasts a 4.61% growth for fiscal year 2024-25, supported by strong services, rising remittances, and robust export growth. The country now boasts foreign reserves covering 14.3 months of imports and 99% electricity access. In Syria, the stock market will reopen on June 2 for the first time since December. The move follows a political transition and signals efforts toward economic normalization. And finally, the United Nations is preparing for a dramatic cost-cutting exercise. Facing a $1.5 billion shortfall, largely due to unpaid U.S. contributions, the Secretariat plans to slash 6,900 jobs and cut its $3.7 billion budget by 20% starting January 2026. The restructuring, dubbed UN 80, aims to improve efficiency and adapt to a changing multilateral landscape. Global stock markets posted mixed results this week as investors weighed economic data, central bank signals, and trade developments. In the United States, the Dow Jones Industrial Average rose slightly by 54 points to close at 42,207.07 points, edging up 0.13%, supported by resilient consumer spend and strong performance in industrials. However, the S&P 500 slipped marginally by 0.01%, and the tech-heavy Nasdaq fell 0.32% to 19,113.77 points, dragged down by weakness in semiconductor and large cap tech stocks amid renewed trade tensions and tariff volatility. In Europe, the FTSE 100 in London gained 0.64%, closing at 8,772.38 points, buoyed by energy stocks and optimism around infrastructure investment plans in the UK. Germany's DAX index rose 0.33%, reflecting improving industrial confidence and export orders. However, France's CAC 40 slipped 0.3% as profit taking and political uncertainty weighed on investor sentiment. In Asia, markets largely moved lower. Japan's Nikkei 225 dropped sharply by 1.22%, closing at 37,965.10 points, with tech and auto shares under pressure following weak export data and a stronger yen. Taiwan's SE weighted index edged down 0.05% to 21,347.30 points as investors await clarity on US China trade agreements that could impact regional supply chain. And that's it for this week's Global Pulse. Stay with us for economic insight, trade intelligence, and global context right here on the Caribbean Business Review.
Welcome back to Caribbean Business Review. I'm Joseph Cox, and today we are pleased to be joined by Gervais Warner, who is the chairman of the CARICOM Private Sector Organization, as well as a former CEO at Massey Group, and now a director at Sandals Resorts International. Great to see you, Gervais. Welcome to the program.
Good morning, George. Nice to be here. Good to see you.
Indeed, my friend. All right. One of the things that we really have to just jump right into it because it strikes us as being very weird. This operating environment, all these geopolitical tensions, tariff structures changing day by day. How does a private sector, you're a private sector leader, how do you plan in this sort of incredibly erratic policy space? How do you function?
Well, I think, quite frankly, like many countries in the world, Caribbean islands, Caribbean countries are basically takers on these international policies. We are not shapers. We are the ones who are affected
Great.
by the decisions that these larger economies make. And so I think, Caribbean business has to continue to be nimble. We have, in the past, I think, grown accustomed to the role of the United States as a market for our exports, as a source of products and services for us. And we've developed a relative dependency and attachment, I would say, to the United States. Clearly, this is a moving target and we cannot rely on it going forward into the future, right? And I think the rest of the world is realizing the very same thing. So I don't think this is a particularly unique challenge for Caribbean business. I think that private sector companies around the world, in Canada, Mexico, in Europe, in Asia, Africa, India, are all thinking to themselves the same thing. Because let's remember that, this world has gone through a huge integration of economies, and the global economy that we've referred to for scores of years now has become the normal. And so the uncoupling that we see happening with these nationalist kinds of policies is a new environment, a new regime, a new a whole new system for us to grow accustomed to. And Joe, what I want to say for us here in the Caribbean, we had a recent experience that should serve us very well, Joe. You might remember that during COVID, we were cut off.
Yes.
You know, the Caribbean had this experience. Oh boy, we are on our own, right? There was no cavalry coming in to save us. You know, if there were supply chain shortages in the United States, you know, we were not going to be able to get in product. If vaccines were rolling off of production lines, you know, we had to fend for ourselves. We weren't manufacturing any vaccines. We had to find new partners to get vaccines into our countries. And I know certainly leading Massey during that period, we became extremely flexible about how we related to our supply chain. We became very interested in the responsibility we had for assuring that there was food supply in the countries in which we operated in the Caribbean. And we therefore diversified our sources of where we got products from. And, you know, quite honestly, some of our manufacturers, some of our principals were helpful in getting us product from Brazil or product from Mexico or other places where there were supply chain challenges in the United States. But we also spent time ourselves looking for other different suppliers, becoming more self-reliant. And I think that that's what the private sector in this moment, in this particular situation, this evolving normal in the world needs to do. We need to be more nimble. We need to look south. Fortunately, with the boom that's happening in Guyana and the infrastructure that's going down between Guyana and Brazil, I think more and more we can start looking towards our southerly neighbors for, I think, greater linkages for products and services to support our economies and our people.
No, that's fine. But one of the things that strikes me is that, frankly, wasn't during the pandemic, wasn't a massive group, for example, the aberration rather than the norm, because it seems, at least just looking on, that a number of our companies across this region, frankly speaking, haven't seemed to have learned anything from the pandemic experience in terms of diversification of supply chains, etc., etc. And further, it goes on to beg the question, this whole issue of regionalism, right? And trying to internalize source. Isn't it is now starting to seem to be more of a political construct than a business reality. And one wonders what is really going on? Is it that my perceptions are wrong or what?
Well, I think that perhaps more companies than you may realize have awakened to the necessity for diversification.
Mhm.
You know, this may be a gift, you know, one of those disguised treasures. Because look back at when the Caribbean recently did the most to act in an integrated fashion. I think left of our own devices, we will continue to chug along and sort of pay more attention to our domestic issues than our regional ones. But, you know, there was this opportunity for us to host the World Cup of Cricket. And like this amazing thing happened when our governments came together, national security ministries developed ways of collaboration around immigration and security background checks so that we created this zone in the Caribbean of free travel for this moment. All of the systems that we put in place for that occasion exist. The level of trust that we created during this period should still exist. Nothing's really changed. It's still the same people. But somehow, as we don't have the impetus of hosting a World Cup of cricket, we can't seem to put it together. And the free movement of people becomes this, almost third rail for some countries that we will not approach. Again, I mentioned the pandemic. When we found out that we were on our own to figure out how we're going to get vaccines and how we were going to figure out how we're going to open our economies, etc. I saw the heads of the respective Caribbean and CARICOM countries come together in ways that I was proud of.
Mhm.
And I saw us be generous with one another and lean into a level of collaboration around travel, a level of collaboration around the procurement and sharing of vaccines that made me hopeful. Now, in the post pandemic period, I would say, because I attend a lot of the CARICOM heads of government meetings, that there still is a much stronger impetus for integration than I would say we saw pre-pandemic. And I think that this nationalist imposition of tariffs, et cetera, that's happening with our largest neighbor, our most integrated economy, is another great impetus for um, CARICOM leaders, CARICOM countries to recognize, listen, we really need to create the integration across our little region here because individually standing alone without the support and connectivity to the United States that many of us enjoy bilaterally, we are unlikely to be able to stand it on our own.
No, I hear you on that, and indeed, I would say to you that for me, part of the challenge, as you call it, the third rail, is the whole matter of free movement of persons because it just baffles me that in 2025 we're still talking about these restrictive lists that we have, and which, to be honest with you, is anathema to the whole concept of full integration and movement of persons across the region. But let me move on quickly to another area, Jervis, because again, our
But Joe,
foreign
no, don't move off
investors.
of free movement of people.
All
Don't move
right.
away from free movement of people. Just for a moment,
Yeah,
I
sure.
listened to a podcast and I heard someone speaking about immigration in the United States, and it's not too dissimilar issue as we have with free movement of people in the Caribbean. One of the things I guess we've never really done, and this is what this person was asserting, is the benefits of immigration into the United States versus the risks that people keep touting and keeps turned up in terms of volume. So no one's speaking about the facts of what immigrants from one island to another island do for the labor pool, what the opportunities that get created when
Yeah.
we actually operate as a larger workforce for industries in our respective countries, creates for the economic benefit for basically all of the countries. And what everyone kind of spends more time worrying about is the social security, the healthcare burden that immigrants bring to a particular country. And so we're not paying attention to the difficulties we have in getting agricultural workers,
Indeed.
the difficulties we have in spawning entrepreneurs pursuing different industries in different countries. We're not talking about the labor shortage that we have, or shortages that we have in many of our larger countries. Even like Jamaica is talking about a labor shortage. And so I think one of the things that we could benefit from is actually somebody looking into this thing and modeling what are the economic benefits versus the economic burdens, and being able to use facts to demonstrate and debunk this fear
Yeah.
that keeps free movement of people and immigration being treated like a third rail. You can't do it. it's a terrible issue. People don't want to see all these Venezuelans in Trinidad. They don't want us either Jamaicans invading the country. They don't want Guyanese. I know Guyanese ain't going nowhere. Guyanese staying in Guyana. And so they've got the growing economy now.
Yes.
So I think some work to debunk these fears is important, is to make a breakthrough in this perennial issue.
Yeah, but just Jarvis, just to continue a little bit more with that, where it becomes even more stark is that for a number of the countries, most of the countries, truthfully, are grossly underpopulated. And the data will show that by 2050, the vast majority of the population will be, call it, in their senior years. So I mean, we have a serious crisis. But you see, part of the challenge that I'm recognizing is that even governments, yes, there is this fear. I think you put your finger right on it. There's this fear, and there's the issue about the social dimension, what the impact on healthcare, education, etc., etc. But then, from the perspective of the private sector, at least in some of the spaces, you find that persons are saying that they are mad by bureaucratic regulations and all sorts of challenges. And frankly speaking, for them, it's easier for them to get somebody using a work permit rather than going through the skills regime that we have in CARICOM. And honestly, there is minimal impetus for people to really fall in line and go through with the current regulatory frame. What would you say to that?
Oh, Joe. So, our English-speaking Caribbean territories, countries, were blessed with, this civil framework that the English, left with us when we earned independence. However, it's also this curse of this enormous bureaucracy, which was designed for a completely different framework of governance than an independent country, self-determined, right?
Yeah.
Yet for some reason, like, we don't trust ourselves enough to reinvent our own governance systems for our public services that is fit to purpose. And so the result after 60 years, Joe, is an ingrained way of doing things that is really hard to change and to make meaningful changing. I mean, the longer we go, the harder you have to hit it, the bigger the transition cost, the more difficult this becomes to do. And if you think about any 5-year government, why tackle that? That's it too hard to do, box. Kick that can down the road, let somebody else try to deal with that.
Oh boy.
And so it's hard. And I've seen initiatives in Trinidad and Tobago, Barbados, Jamaica to kind of pick at this. And absent deep transformational work that requires the buy-in of all of society, that says we have to break from this past, we can't continue with this, it'll be very difficult to see our way through
Lord.
this blight.
So basically, you're saying that
inherited.
we are caught in a sphere of basically administrative inertia, but you see,
I think inertia is kind. It's like a quagmire. It's like a quicksand you just sink into.
oh Lord. But all right. Because as we have to wrap this up in a few minutes, I'm curious.
Sorry.
No man, how do we, as you look forward, as you look to the future for private sector, for this region, how do we navigate this? What are some, what is, if there's one item you could put to our governments now, right across this region, what would be the suggestion to really move the needle in terms of really developing our economy, your regional economy, developing that I would call it that enabling environment within which to cope.
Yeah, so the one thing I would say is focus on turning your private sector loose in all industries, creative arts, manufacturing, agriculture, technology, financial services, retail and trade. Just if the mindset is how can we just help the private sector just get as much freedom to run with just guardrails for illegal activity, immoral stuff,
Mhm.
but checking this box and making it difficult to import honey into Trinidad and get a permit for a person to come and work here. I mean, if the focus and mindset was on how we just let's just make it easy, because you know what, Joe? God, one of the greatest assets that we have in the Caribbean is our people. I mean, Caribbean people are creative, they're bright, they naturally are warm people. They get along with people. You know, you talk about trying to teach people EQ. That's like a natural gift that we have. Our music, our fashion. I mean, we have acting and film that could rival the world. We just don't have market for it. How do we get out of the way and let this talent shine
Mhm.
and get access to the world stage? If our governments could focus on that, singularly that as a priority, I think we'd have a new day dawning across this Caribbean region.
With that, well said. With that, Jervis Warner, thank you very much for your time this today as we continue the discussion, the discourse on how we can develop Caribbean businesses. So thank you so much for being with us here on Caribbean Business Review, and we hope to invite you again at some time in the near future where we can continue the discourse. So thank you very much.
Well, you're most welcome, Joe, and it's been a pleasure.
Indeed, my friend.
Take care.
Blessings.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Okay, welcome back, everybody. This is the Caribbean Business Review, and of course, I'm Joseph Cox. With me now is my very special guest, Dan Ashton Smith, who is the head of corporate affairs at Red Stripe. Dan, good morning, good day, good afternoon, good night, wherever in this world that you may be. The fact of life is great to see you, my friend. How are you?
And you, Joe, it's been too long.
Indeed. Indeed, indeed, indeed. Well, then, I mean, we have a few minutes to have a little chat today, and I wanted us to first of all start because with this situation, there's this old saying that is attributed to the Chinese, which we have found out is no longer Chinese, is that may you live in interesting times. And for companies like Red Stripe and so on, I'm particularly curious about how one positions themselves, brand organization, brand positioning, how you really cope in an environment where you have extreme geopolitical uncertainty and instability. You also have a situation where there are restrictions, even within some of your regional markets, on how you can promote your company, how you can project, how you can effectively market. And I suppose the real question is, how do you cope in this sort of environment?
Well, I think it's a matter of this, at Red Stripe, agility has become a non-negotiable. And we've seen it. I mean, coming out of COVID, all of these things that are happening around us. But we like to position ourselves as a growth company, a company that is always future ready. So inherent in our operations is risk management. So through our annual planning and our strategic planning phases, these are 1 year and 3 year planning forecasts that we do. We implement and incorporate in that risk management. And this is where we look at multiple dimensions from market volatility, we look at regulatory shifts, and it allows us to pressure test different scenarios,
Mhm.
and through that we build mitigation plans so that if these things come at us, we can pull these plans and immediately with agility, implement them, make ourselves resonant, relevant, and resilient.
No, I like that. Relevant and resilient. And what was the other one?
Resonant.
Oh, resonant. I love that. I love that. The three R's. When
Three
we were
R's.
growing up, you say about read, writing, and arithmetic. And there's claim those were the three R's. Never quite got
I
the R, but hey.
I
Yeah.
know, but I mean, time
No, but
shifts. So
yeah, but as you go through though, because I mean, the thing is simply is that most of us, for example, growing up, we always remember that famous Red Stripe ad that actually turned into, I think it was a number one song, the one done
yeah,
by Ernest Smith.
Ernest Smith. Yes,
Right.
yes,
But in this new dynamic where we're looking at the shifts in consumer, regional and Jamaican consumer behavior, we're looking at a number of moving parts in this. The real issue, I suppose, comes down to agility, as you quite rightly point to. But the other aspects of it now is, how do you position a brand within not just a regional environment, but a global stage where you still remain relevant, you continue to you know adhere to your ESG principles, but at the same time you are acquiring the requisite market share.
so I think one has to be very conscious of your consumer because at the end of the day, that's who we are marketing to. That's who we're hoping will purchase our products. And we've seen consumers becoming more discerning, they're more value conscious, particularly as like inflation impacts purchasing power. So I think the biggest thing for us is trust and authenticity. And more importantly than ever, consumers these days and research has shown that they're gravitating more towards brands that align with their values and consistently deliver quality. So yes, in the past we've done a song with Ernest Smith that talked about life is just for living.
Right.
Um, when we celebrated Jamaica's 50th, we aligned another singer and we talked about Big Up Jamaica. So we were talking about national pride. So I think the importance is to not be tone deaf in global shifts, in the changing consumer trends, because it's not now about picking the loudest brand, but it's about how relevant you are to your consumers, not being tone deaf and making sure that you're providing them with the things that they want and the things that, of course, connect with their values and also cross connects with the values of your own company.
Yeah. No, I get you on that. But, you know, so for example, what's the difference in the dynamic between the positioning of a red stripe, say in the Caribbean, vis-a-vis in the, call it in the global environment? Is there any difference in how you treat, or how do you position yourselves?
And not necessarily. We want to have one voice.
Mm-hmm.
And I think what makes us, it's easier for us is that Red Stripe is part of Brand Jamaica, and I think that is where the Caribbean ought to position itself on cultural relevance in the global marketplace. We are who we are, and we don't change who we are depending on where in the world we are. Everybody who sees a red striped stubby knows this is Jamaica. It's
Mm-hmm.
Jamaica's golden liquid in a bottle. And so we don't want to seem, dysfunctional or bipolar. We have one voice, whether we're in Europe or whether we are in Jamaica. Of course, cognizant of the fact that there may be political nuances or socioeconomic nuances, and so we may shift in the how of our messaging, but not the message.
Mm. No, I get that. I get that. But then you see, the thing is that what I keep looking at, because it's still a consumer, it's a product, right? And if you are in a space whereby somebody is saying you cannot advertise, but in the United States, for example, if you chose to go there, you would have no such restriction, because all of us,
Yes.
we see the beer and the whatever else, the market at will. So to me, and I'm no marketer, I'm no communication specialist, but it strikes me that when you're in that type of thing, there's bound to be a difference in how you position yourself, because in the region or wherever you have these restrictions on how you market versus an environment where you are free to explore your creativity. I don't know how you would say that, boy. Yes, you're consistent with your brand, I would think, but the approach is bound to be much different.
But I think we're saying the same thing because I said it has to be in the whole. So diversify our engagement strategy. So we're not necessarily in those areas that you would happen to have advertising restrictions. Then our dependence on traditional media would be different. Hence, our engagement strategy would either shift to more cultural partnerships, community-driven sponsorships, and definitely digital storytelling that's centered again on what I referenced earlier: Jamaican culture, Jamaican entrepreneurship, innovation. And this, of course, allows us to stay connected. Allows us to stay relevant without breaching regulations. And of course, positions you as one who is able to proactively pivot in that and protect your brand equity, even in restrictive environments.
But are we as marketing, because marketing and communications has certainly transformed over time. Then I mean, nowadays I hear people talking about all sorts of high science, neuromarketing, quantum marketing, all of these dramatic things, and at the same time, with the advent of social media, that has also changed the whole landscape and how you get into people. And I'm just wondering, from where you sit, given all the changes that are going on, how do you see this market truly evolving over the next, I don't know, 5, 10 years?
Well, I think you're going to see a lot, and you referenced it around neuromarketing. And the principles around neuromarketing are largely around sensory branding. It's about emotional storytelling, also experiential brand activations, using how people's eyes move to see how they're going to respond to your brands, especially when you're doing, research, etc. Now, I would dare say that Red Stripe has always positioned itself in that way, in terms of our brand equity. how we use the iconic red stripe visual, our crisp logo, the unmistakable bottle shape, and our campaigns have always centered on Jamaican culture, music, and togetherness. And these are emotional triggers. People instantly recognize Red Stripe, they're familiar with it. It indicates national pride. And of course, that whole centeredness on Jamaicanness, emotionally triggers connectedness and joy and collective memory. So we have always done that. While we may not intuitively use those tools, but they are part and parcel of what Red Stripe has been over the years. Will we move into that? Who knows? But anything we do has to be purposeful, Joe, because we want to always be relevant, resonant, and of course, making sure that we're connecting with that consumer and using the tools, not just for using the tools' sake, but making sure that they're delivering on our brand purpose and our brand essence, and of course, making us pivot as our consumers' tastes and preferences change.
No, no, quite. But at the same time that you're saying that, and I totally take your point. I find that you guys are really in a unique position because you have, at the very least, probably I'm wrong, but at the very least, two beers that, at least in my mind, you'd be saying that you're competing against yourself. And one wonders how do you walk between those raindrops?
Well, that's it. It's about differentiation. So we position, and I know you're talking about Heineken vis-a-vis Red
Yes.
Stripe. We position Heineken as a premium brand vis-a-vis Red Stripe as a grassroots Jamaican, national brand.
Boy, then I don't even know if I agree with you about that. The traditional red stripe, what I call the full body beer, right?
Hmm.
That's fine. I'm good with that. But you guys seem to have nuanced the gall into all sort of flavors.
Yes.
Sorrel, lemon I saw, and some other things. So I don't even know.
So it comes back to my earlier point around innovating and always staying not necessarily on top of trends, but yes, we look at those as well. But that is also about relevance. We see where Jamaican consumers have shifted in their preferences. They like sweet or lighter beers. And so, hence why we innovated and we made sure that we have a portfolio of products that can fit these different discerning tastes and make sure we connect with our various audiences or different demographics. And again, comes back to my point, resonance and relevance.
I so love that. I so love that. But then tell me something. And this one, I mean, if you can't answer, you can't answer. That's fine.
Yeah.
But out of the all the variations of red stripe, what is the best selling one? Is it the traditional beer or is one of these flavored beers? I'm just curious.
It's always going to be the stubby.
Okay, all right. Enough said. Enough said. No, I saw these things and I was just curious about it. But then the last question I have that I'll
Mhm.
ask you for really very quickly is how do your corporate affairs, right? So that's communications, marketing, and all things. Where is the intersection? How do you navigate those waters?
Well, the truth is, Joe, the line between marketing and corporate affairs has really become increasingly blurred. And today, reputation is a big part of brand equity. Corporate affairs ensures that marketing campaigns are not just creative, but they're credible, and that's what our consumers want. So at Red Stripe, the two functions, we work closely together. Nothing that you see in the public sphere is not touched by corporate affairs as well as marketing. So it's not just messaging, it's a real commitment to action. And where misinformation can spread in minutes, it's not enough to just have a good ad. You need a strong, consistent track record. And that's why
Indeed.
corporate affairs and marketing
Indeed.
together help us build and protect our
In,
public trust.
Indeed, when you realize that the average attention span by the new studies is 8 seconds. Can you believe that? Eight
Yes,
seconds. You have
yes.
8 seconds to resonate. Wow.
Exactly, exactly. So it has to be punchy, but at the core of it, it has to be authentic. And like I said earlier, and I keep coming back, people are not about the loudest voice, but the ones that are most relevant and the ones that tap into instinct and not just intellect.
Yeah. All right. That's where we have to leave it for today. Dan Ashton Smith, Head of Corporate Affairs at Red Stripe. Thank you so much for your time and for your and I do hope you become a friend to this program. Not just a friend
Of
to me,
course,
a
I
friend
will.
to the
I'm
program.
always a friend, Joe. And it was such an absolute pleasure chatting with you.
Indeed. Thanks so much again. All right.
Ladies and gentlemen, the word of the day has been interesting. And with that was episode 3 of the Caribbean Business Review. We want to thank our guests, Gervais Warner and Diane Ashton Smith, for sharing their insights with us. And we thank you, our viewers, for staying with us and for continuing to grow our audience. And so we invite you to like, subscribe, and to share with others who may be interested. And if you want to get this news in your hands, then you can reach out to us at Caribbean Business Review at gmail.com to get a copy of the Caribbean Financial Dispatch. And with that, I am Sherry Ann Farkison, and I say, walk good until next week.